That's right, we're back with a lovely update, weekly update. I hope you're ready. I know it's been a couple weeks since I've done one, but hopefully this one's pretty good for you and you enjoy it. We'll see how this one does. I've been pretty busy lately, so it's been hard to get too many videos out, so that's why I've been missing out on the recaps. But let's take a little look and see what exactly is going on in the market. So, this may seem like a shocker. We had a red week. We were down. We were down this week. Can you believe it? It seemed like it was never possible, but we're down. So, overall for the Dow, we were down 1.38% for the week, but that is including last Friday as well because we were obviously not trading Monday. But overall, it should be pretty accurate there. So right around 1.38% down for the week, which leads us now for the on year to date for the Dow up 1.59%. Overall, not anything crazy with how crazy high the market was last year. I just think as far as what our economy's doing, I think we deserve to be a little bit higher up. I mean, what can I say? I'm not going to complain, but we'll take any sort of positive nature. No doubt we'll take positive action. So, very cool in that aspect. So let's take a look at the S&P 500, see if this is looking, oh, well, look, it's pretty much the exact same story. Boom, boom, boom. So, we saw a little bit of a reprieve on Wednesday, and followed by just a couple red days, no doubt about it. So on the 5-day, down 1.25 for the S&P 500. Year-to-date, up 3.3% though, so that's not too bad, all things considered. Definitely overall, pretty solid year so far, even just to start the year. I mean, we're not through 2 months, and to see 3% gain, I mean, you can only really expect to get 7 to 10% gains per year on average on the market, and last year we had nearly 30%, so you can't expect necessarily to get the world and everything. So now we take a look real quick here at everyone's favorite NASDAQ, the just beast of an index. Thing goes up like no other, up 6.7 year to date, but on the week was down 1.6, so a lot more drastic, a little bit more volatile in terms of moves. There's no doubt about it, but still up 6.7% for the year is pretty darn crazy. Definitely very crazy. And we see the same story as far as the chart is concerned as well. Good Wednesday, followed by just a rough end of the week. So we'll get into some news, what happened this week. There's a lot of very interesting stories coming on. I will say one thing that I meant to include here that I didn't, but we did actually get a couple key indicators here. So overall, we found out that actually since I think 15 months, recession chances are the lowest that they've been in 15 months as of now, which I think is pretty darn crazy. We get to this point where you're expecting a recession every 8 to 10 years, typically every 8 years, closer to that, and we're going on a good 12 years now. People were freaking out last year, and there's a lot of people that missed out on a lot of gains in the market because they were afraid that there was going to be recession last year, and people are afraid there's going to be recession this year. But now we're at a point where recession chances have dropped down to as low as they've been in 15 months because the economy is just doing so well. So again, is why I speak to the fact that you want to definitely avoid freaking out too much and being afraid. Always just keep invested. I mean, it's not going to hurt you to stay invested no matter what happens. So if you wait around, you just miss out on some money. There's no doubt about it. So we also did find out from Warren Buffett. Warren Buffett went ahead and said that he does believe that stocks will in fact beat bonds in the long term. No doubt about it. I mean, obviously they will. There's no doubt about it. So that's not news to anyone really. But he said stocks will most likely beat bonds in the long term, regardless of recession or not. So he's still bullish. There's no doubt about it. Let's get into some news a little bit here in order of what we saw throughout the week. So we saw stocks slip originally. A lot of this was fear from Apple cutting their guidance. They gave a warning on their sales, expecting them to be a little bit lower this quarter due to the effect of the coronavirus. It's pretty well impacting supply chain, just sales in China, everything like that. So they're giving a warning. They're giving us a little bit of a warning as to what is going to go on for this next quarterly earnings. And I think it's pretty helpful because this is a stock that's been, I think, very much outgrowing its what it should, I should say. It's outgrowing the valuation I think it necessarily should be having. I think that this stock used to be pretty well good, fair value. I think it's getting slightly over to the overvalued status just a little bit, and I rarely say that for a company like Apple because they're fantastic. This company checks every box that you want. I just think that share prices are getting a little bit high for the time being, but I certainly understand, and I think there's justification for the valuation. But I think a little bit of pullback is pretty nice. I'm certainly not upset with a little bit of pullback this week, because it's a position I'd even want to build more, but right now it takes up such a high percentage of my portfolio, it's hard to really build that much more in it because I like to be diversified. And if you've seen my portfolios, I certainly am quite diversified. But pretty much that shook the market because of a company like Apple's scared about it. Obviously, you see all of their suppliers from chip providers all pretty much got shaken as well. As far as some economic data, we saw housing fell 3.6% month over month to 1.56 million, but that was against an expectation of 1.42 million. So overall, they beat estimates pretty handedly, which is still very, very good. So a little bit of fall in new housing, but overall, still a good beat as far as what you're expecting. As well as permits was up quite a bit over the last years as well. Apparently my voice just gave out, and I apologize. I feel like I'm not an adult at this point. I apologize. But what else do we get? We get ads here from Seeking Alpha because, sorry, I haven't upgraded. I'm sorry I haven't gone to Seeking Alpha Premium. What's it called? I don't know what it's called. Premium. It is premium. Of course it's premium. But we also saw the, supposedly, we're seeing a potential peak to the coronavirus, and they're expecting not necessarily as bad of appreciation in cases or increase in cases. So he says over the last 2.5 weeks, we have seen a steady decline in the number of new coronavirus cases, and that is positive. It says AP Moller-Maersk CEO Soren Skau. Moller-Maersk CEO Soren Skau. I don't know the guy, but he says that we've seen it. It means very well we could be set for a peak within the next 2 weeks. He added, if that were the case, then we would expect a very weak March and a rebound in April, a sharp rebound in April. Sharp rebound, which makes sense because you pick up that business that you lost while people were not really shopping. There's still a lot of uncertainties out there, and to be fair, I completely understand this. As someone who works with people, it's kind of shocking the amount of people who really fear even purchasing anything that's not, that's made in China right now. It's crazy. And I understand it, but it's such an irrational fear, I think, for people out here. So I think it will impact some businesses, no doubt, and I think it'll have a relatively decent impact for several months. But it shouldn't be something that people here fear. I mean, I don't know. Maybe I'm insane, but people are just out of their mind. But if we see a peak, that's exciting. I'm still scared as far as like what actual numbers look like for this thing. I don't think we actually have an idea. I don't think the Chinese government's being 100% accurate with it, so as to avoid some global panic, I believe. But overall, if we hit a peak, that sounds lovely to me. And of course, there will be a peak at some point, and there are still companies working on some drugs to help this. So one thing that I've known, as far as studies are concerned, that obviously it does not react too fondly to HIV drugs, which makes plenty of sense because nothing responds fondly to HIV drugs because they are meant to kill some of the most harmful viruses out there. So it makes sense that they'd be attacking, this coronavirus strain as well. So that just makes sense. We also see T-Mobile and Sprint after what seems like 50 years. I swear this has been it's been at least 10 years in the making. They've announced into an amended merger agreement, and it's been approved. So immediately following the merger's closing, Deutsche Telekom and SoftBank will hold stakes of approximately 43% and 24% respectively. A separate agreement entered into by SoftBank will result in an effective exchange ratio of 11 Sprint shares for each T-Mobile share, up to 9 3/4 shares, up from the original 9 3/4, that is. So the ratio changes due to SoftBank agreeing to surrender 48.8 million T-Mobile shares acquired in the merger to the new company immediately. But finally, we're going to see this deal potentially go through. When? I don't know, but at some point it will. Probably another 2 years. But we also see, obviously, stocks take a hit just because coronavirus as well. There were more fears here. I don't think that was necessarily all, but we saw a little bit of a fear because of that. As far as some specific companies are concerned, we see that L Brands is actually going to be confirming a deal with Sycamore Partners to privatize the Victoria's Secret business. So obviously Victoria's Secret, it's women's stuff and women's stuff. Is that how I should say it? Women's fashion and undergarments and stuff like that. Okay, I know what Victoria's Secret is. I'm hip with the ladies. So, but they're planning on obviously getting rid of the Victoria's Secret business because it's one that's been declining pretty steadily for them. If you think about Victoria's Secret, they're not really very well in place in terms of the digital market. They don't really have much going on for them in terms of e-commerce. It's an area they've been struggling with getting adapted to. And for the most part, Victoria's Secrets, you're going to be locating in malls, stuff like that. And malls are not necessarily as hip as they were before. Not as many people attending malls. Attending, that sounds weird. Going to malls. But they plan on positioning Bath & Body Works to be a highly profitable standalone public company. That'll be interesting. So that'll be who's buying shares of Bath & Body Works? Maybe me? I don't know. Bath & Body Works, let's go. We also see Morgan Stanley is actually purchasing E-Trade. So this is actually something that I called quite a bit ago. I knew this was going to be something that was coming. I knew there would be consolidation in the market. And I really think all this kind of disruption really started with Robinhood's commission-free trading. I hate to say that Robinhood kind of just destroyed these brokers, but they kind of did. This commission-free trading, it's leaving these companies finding ways to make ends meet because these companies now, they have canceled their commissions too. And guess what? Now they're finding ways to make more money. So E-Trade here sold that to Morgan Stanley. Obviously, I think it's not like this is just a recent development. I can guarantee these have been acquisitions that have been desired for quite a while. But I think this just becomes a lot more feasible now that they don't have all that, all that mumbo jumbo to rely on. But I don't know what that even is supposed to mean. But they don't have commissions trading to rely on as far as a bunch of revenue, stuff like that. So it's a changing business model anyway, so they're getting acquired. And you see it too with Charles Schwab and TD Ameritrade merger too. I mean, what can I say? It's just an interesting time in the market, and I don't know if there's going to be any other big moves in my opinion. Maybe like a Fidelity acquiring an Interactive Broker, maybe. But I don't necessarily see any big moves happening other than this. But this is crazy. That is very crazy. So, you see, updated here. You see this, the deal is official. All stock purchase will have E-Trade owners receiving 1.0432 shares of Morgan Stanley for each share of E-Trade they hold. Or a price of $58.74 each based on last night's close. E-Trade is up 24%, $255.74. Morgan Stanley is lower by 3.5, obviously because $13 billion is quite a bit. The biggest acquisition by a major Wall Street bank since the 2008 financial crisis. And again, that means something. It doesn't mean that there's necessarily an issue with the economy. It means there's an issue with this company right now. E-Trade's finding ways to make ends meet because of how much their business had to have changed because of the getting rid of commissions. I mean, this was their lifeblood, if you think about it. So, nothing too crazy though. Nothing too crazy. Good deal though. And finally, we have Wells Fargo paying $3 billion to settle fake account scandals. So there were some fake accounts from Wells Fargo. Now they're paying $3 billion to the U.S. Department of Justice and Securities and the SEC as well. So that's crazy stuff. Criminal investigation into its sale practices. And it's a community bank from 2002 to 2016. No charges will be filed. But obviously, they've reached an agreement to pay cashish. That's it for your weekly update. I really hope you enjoyed. And well, for a good week. Next week's really going to be dictated by earnings. I think there's a lot of huge earnings. I think that'll dictate the market next week. So we'll see what happens. I think it'll be a green week.